Hey everybody, welcome to the morning market briefing. It's Monday, March 21st, 2022. Hope you had a good weekend. Hope everybody out there is doing well. Busy week, really ramping up. Obviously, major stories remain in the headlines, things like Russia and Ukraine, things like inflation. We'll definitely touch on those. We're also starting to roll into some earnings coming out this week. So lots to chat about. We're going to open up with Russia. It does seem that Russia is now transitioning to kind of their plan B. Initially, they tried to take Kyiv. They wanted to do it quickly. They wanted to get Zelensky out, replace him in any way, shape, or form. But they are now kind of going a different route. They're attacking more from the south, trying to create a bit of a land bridge from Crimea into the separatist regions of Donbass. Definitely a change of pace. I don't know that we're necessarily surprised by that, just given the length of this. I mean, we're coming up on a month since they initially invaded. Ben, give us kind of the state of play and what we're seeing, currently, especially on things like peace talks. I mean, I think it's interesting that, Russia says these aren't progressing as much as they'd like. That's an interesting thing for the aggressor to say.
Yeah, I think that is, so basically what they're trying to do is Crimea is in very south, and then the Donbass, Donetsk and Luhansk, they're on the eastern edge of Ukraine, and then you have Mariupol in the beginning, in the middle, which is also on the Sea of Azov, and it's designed to connect Crimea to Donbass. And so that's basically what they want at this point. Russia is to say, hey, we want these regions, and then we also want Ukraine neutrality. They tried to get a surrender in Mariupol overnight, but the Ukrainians said that is not going to happen. The pro-Russia separatist leader in Donetsk said it will take no less than 1 week to capture Mariupol. So Russia says, well, we can either do this peacefully or we can do this aggressively. And it seems like they have chosen the way of aggression. Obviously, Russia has been very aggressive in terms of its claims of what it can do. And it's been less, its execution has been subpar from their point of view. What Russia is trying to do is they're trying to promote these peace talks. But again, in my opinion, and I think what most reasonable people would assume, is that Putin is not going to have a peace talk unless Zelensky comes with a white flag. And obviously that's not happening right now. So obviously there aren't any progressions in peace talks because peace talks are almost conditional on surrender. So that's Putin's MO. In terms of the European response, I think that we are starting to begin to see the Europeans actually entertain energy sanctions a little bit, but it's getting some interesting pushback here. The representative of the EU for Foreign Affairs and Security Policy said that Russia is committing massive war crimes and that they will discuss energy sanctions. But remember, this is the EU, the representative for the EU for Foreign Affairs and Security Policy, not energy, not economy. So yes, from his point of view, they'll discuss energy sanctions. The Irish foreign minister said that we're open to that. Irish obviously no strangers to taking one on the chin for the greater good, but the Dutch said that they're still dependent on Russian oil and gas and can't cut itself off by tomorrow. The Germans say that they maintain the stance that Germany can't do without foreign oil imports from Russia. And Hungary, even more forcefully, said that an EU sanction on Russian energy would be a, quote, red line. So there's definitely splintering in the EU, even as they begin to talk about energy sanctions. So we'll see where that goes going forward, but it could further increase the price of oil worldwide as we move forward.
Yeah, not the only thing potentially increasing the price of oil. We've got a gas tax holiday, which at surface level may sound like something that's really favorable. Governor Brian Kemp signed that into law and temporarily suspend Georgia's gas tax, which is a little bit under 30 cents a gallon through the end of May. Ben, basic supply and demand suggest this may not actually be a long-term good thing. Explain that to people.
Yeah, so basically what you're doing is what is higher prices? Higher prices depress demand, okay? So that would, lower demand means lower prices. So higher price, lower demand. So what happens if you get a gas taxing gas tax decrease is that you shift up that demand curve. So you're still going to want the same amount of oil. In fact, you're going to want more oil. So reducing that tax actually increases the demand for oil, which will actually increase the supply constraints that we have on oil right now, which means even though the price that you pay at the pump may for a week be lower, you go and probably another couple weeks and that demand will be right back up there. And that's with the gas tax holiday. So once that gas tax comes back into effect, the price is going to be even higher than that. And this comes going into Memorial Day weekend. I get why the governor is doing that. I get why a lot of politicians are doing that, because they're powerless to really do anything else at this point, because they can't just go out and pump more oil, and they can't go and refine more oil into gasoline, and they can't build a pipeline to take the gasoline into the gas station. So they can't do that. So they're trying to do everything that they can to take some pain at the pump down for consumers, but in doing so, you're creating some unintended consequences, which could only exacerbate this situation rather than making the situation better.
Yeah, I think it's going to be interesting to see how it plays out again. I mean, on the consumer end, it seems like, a win, but it's not going to have the overwhelming positive impact, I don't think, for the reasons Ben just mentioned, kind of in the midterm. Tom, I want to throw it to you. We talked a lot about the Fed last week. Talk to us about the ECB and what Lagarde's saying and doing.
Yeah, so after last week, they turned surprisingly hawkish. They're starting to walk that back. Christine Lagarde basically said that they're going to need to have monetary policies in place to support the all of the things going on with the war effort in Ukraine and the conflict over there and the potential impacts on their economy. And they basically said, we're not going to follow along with the Fed. We're in different cycles, which we've been saying on this call for the whole time. The only issue is that they're basically saying that even in the worst case scenarios, they still think that GDP is going to be 2.3% this year, which makes absolutely no sense because they posted a 0.3% Q1 and they're estimating a 0.3% Q2, which is sort of in line with the Fed saying that inflation is only going to be 4% this year, which is that they're so far behind the 8 ball in terms of hitting 2.3% that this seems like a credibility conundrum, a lot like what we had with the Fed, which is they're saying, hey, growth is awesome. We're going to crush it this year. And it's like, don't look at the fact that so far this year, we have not crushed it even a little bit. And that's pretty much where we're at. We're seeing them really struggle with this. They've been behind the 8 ball the entire time. That's really the big change is the euro area is in a lot of trouble and it's going to continue to be. In terms of US bonds, we're seeing a really, really flat yield curve. The 2-year finally crossed over the 2% mark, which is the highest it's been since 2019. And we're still inverted 7 to 10s. We're just seeing an unusual move on the bond market. I'm of the opinion still that we're oversold. I think we should see some really good demand on bonds this week just because rates are at a point where these are untouchable levels really for the last couple of years. So I think there should be quite a bit of demand, particularly being in the last week of the quarter. We should see people rebalancing. And so while there aren't a lot of people who are in bonds and there aren't a lot of people who have done well in bonds or in stocks so far this year, I think that people are still going to get asset allocations correct and they're going to have to get to the point. They have been saying 2.24 right now in the 10-year. I mean, we're really, really cranking on bonds, and I just can't see that being sustainable, especially with everything going on. I think that we're going to have to see either the front end of the curve come down or we're going to see rates kind of spiral a little bit, and we're going to see a little bit of a slowdown. But we're really right there in the middle. It's going to be an interesting week to see where the move goes.
Yeah, I think that applies kind of across the board. I mean, it's a real phenomenon when you get to end of quarter to see people start to tighten up. Everybody wants quarterly statements to look like they're doing what they said they would do on asset allocation. So I think we may see some moves in fixed income world, also in equity world. We'll be interested to kind of keep an eye on that, see if we kind of buy this thing back up a little bit. Ben, interesting story with General Motors as it relates to Cruise. So Softbank is backing out of its investment in Cruise. They're selling their initial investment back to GM. They've also essentially said, hey, we're not going to do our further investment that we said we would do. The spin machine is working overtime for GM, trying to paint this as a very opportunistic good thing. Meanwhile, you have Softbank that has troubles of its own, needs the cash. How does this actually work in terms of, is this good for Cruise and for GM specifically, or is it too soon to tell?
If you buy into the long-term story on Cruise, I think it's good. I think if you buy into the idea that SoftBank is a big investor and knows what's going on there, and that they're getting cashed out effectively, I think that that's bad. Now, SoftBank did have to come up with some more money. And in February, they said that they would be doing that, or excuse me, end of January, they said they'd be doing that. So it's difficult for me to think that in 2 months, they would just completely reverse course on it. So maybe it has something to do with SoftBank more than GM. Nevertheless, this is a down round. It effectively values Cruise at $17.25 billion. That's well below the $30 billion valuation based on Walmart's buy-in from last April. You've seen a lot of these self-driving companies perform less well in the last 6 months, especially as the SPACs have kind of come and normalized a little bit more. But I do think that it would look better if GM had found a different buyer for the SoftBank stake to say, hey, SoftBank's out, but we found another investor. And clearly we have some compelling technology here. And I think that this hamstrings GM's cash a little bit more. They're already spending a lot of cash on these battery plants and electric vehicles. And so I think that this will push out some of the higher dividends from GM, which we've enjoyed in the past. So I think this is probably a small negative for GM, but in terms of, an indictment on the company, I don't think it's that, but it's definitely something to watch a little bit closer.
Good deal. Yeah, and GM shares down about 1%. So the market, at least for the moment, pre-market trading seems to be digesting it similar to you, where it's a little bit of an impact, but certainly not a doomsday scenario. It's Monday. We got lots of mergers. Ben takes on a tour of everything that's going on. Feels like every Monday we got a couple of these.
Yeah, private equity is the big buyer today. So Nielsen rejected its takeover attempt. Elliott Management had been trying to buy the company for $25 a share. And Nielsen actually rejected that. So it's down to $20 pre-market. You say, why would you reject a deal like that? Well, you think you can do more. Maybe you have a different buyer in mind who could actually pay more than Elliott. So Nielsen, the TV ratings company, is rejected that deal. Berkshire Hathaway, Warren Buffett's firm, is buying Allegheny Insurance. It's one of the few companies on the New York Stock Exchange, actually, which has just a single letter as its ticker symbol. It is Y, Allegheny Insurance. So file that away for your next trivia contest. But it won't be around too much longer because the deal is expected to close in the fourth quarter of 2021. Allegheny is really big in reinsurance, which is really where Berkshire Hathaway got its start. It's being purchased at a 25% premium to Friday's close, which is basically fairly in line with what you'd expect for something like this. But what's interesting here is it includes a 25-day, quote, go shop period, which means that Allegheny can, for the next 25 days, say, hey, we have this deal in hand with Berkshire Hathaway. Does anyone want to give us any more money than this? Which is really powerful bargaining chip that Allegheny was able to negotiate into this deal. And it's a little bit surprising because I would have thought that Berkshire Hathaway, and especially Warren Buffett, who's done so many deals in the past, would say that's a non-starter. We don't want to be bid up in this transaction. So that'll be something to watch. And then Thoma Bravo is buying Anaplan for $10.7 billion. Thoma Bravo is a big private equity shop on the West Coast. They are a little bit interesting because they buy software companies versus a lot of private equity companies buy companies like Allegheny or Nielsen, something that's a little bit more and older, maybe less levered, and could be levered. But Thoma Bravo chooses to buy software companies, and they're buying this Anaplan company, where they really want to make Anaplan a platform. Anaplan was founded in 2006, came public in 2018. It makes software that helps businesses plan by modeling for different types of forecasting outcomes, things like managing a sales operation, managing inventory, managing supply chains, things like that. So that's the software that Anaplan provides. It'll be an all-cash deal, $66 in cash. $10.5 billion. So lots of deals going on right now on a Monday morning.
Good deal. As we said on the onset, a bit of a busy week. We've got Nike earnings this evening, which should be a good look through at actual consumption, what consumers have been doing. So those earnings come out this evening. Tuesday, we'll have Carnival earnings in the morning. NVIDIA has a big analyst day during the day, and we'll have Adobe earnings in the evening. Ben, what else are you keeping an eye on this week?
Yeah, I think those, it's nice that we're actually getting real companies reporting real things. I think that for the last month, a lot of it's been speculation about how the war in Ukraine is going to impact a lot of companies. So we have a couple big ones this week in Nike, Adobe, that'll really give us a good idea of what's going on there. One of the things I'm actually looking at fairly closely is used vehicle prices. There's some other ways we can get faster data than some of the national data that goes into the CPI number. And what I'm seeing is that used vehicle prices are really starting to fall fairly dramatically. Beginning in, so you had a massive month-over-month increase in October, you're up 9.2%. But ever since that point, we've decelerated. We're up 3.9% in November, up another 1.6% in December. But by January, we were flat. In February, we fell 2%. And in March, so far, we've fallen 3.8% from those February levels in terms of used car values. So those Kelley Blue Book values are going down. So keep an eye on that because that could allow for some relief in the headline consumer price inflation numbers as we progress over the balance of the first quarter and into the second quarter. So keep an eye on that. And we'll see how it offsets oil prices because that'll be the big conundrum in Q2.
Cool. Tom, what's catching your eye this week?
We just need to avoid an inversion on the yield curve. We're getting super close. We've got about as tight a spread on the 210s as we've had, and so that's really what I'm hoping is we don't just see some sort of anomaly where we see the front end move up too much and then bring on the ultimate harbinger of recession, just in terms of historic precedent. But I mean, we're looking for deals. We've got a lot of upgrades coming through to this morning. Dallas Fort Worth airports. The Mets got upgraded. We have a couple pieces of debt that are associated with the New York Mets. They got upgraded. So we're seeing Uniland really improve in terms of credit, but we're seeing them sell off significantly in terms of yield. And so we'll be out there hunting for new bonds for everybody.
Good deal. We'll wrap it up there. We'll be back tomorrow morning. Hope you guys have a great day.